We are big believers of the Georgia's 529 plan. Okay, 529 plan is this: you can put money away for anybody. It does not have to be your own dependent, and it's not on a pre-tax basis. But you basically put that money in there, and it grows tax-free, and then they can use it to pay for their college, and they never have to pay taxes on it. It's also very effective for estate tax planning purposes because it gets you estate tax planning way beyond the scope of today, but that's another tax we have out there that says once you have over a certain dollar amount, and if you die with that certain dollar amount, they tax you on it as an estate tax, and you can only gift a certain amount per year to people in order to reduce your estate. This gets around that, and you can give huge amounts, like over $100,000. So it's a great way to do that. Let's skip the uniform definition of a qualifying child because you can read it and it speaks for itself. Section 179 deduction, though, is important. Here's the thing. When you are, again, this is going to apply to people that either are buying real estate or have their own businesses. Or in some certain situations, you're buying equipment that you have to use for your job and you're not reimbursed for it. Okay, so that's where this is relative. There is something called a Section 179 deduction, and the purpose of that is to say items that would normally have to be capitalized, which means you cannot expense them and write them off, but instead you have to depreciate them over time for tax purposes. Like, for example, you buy a computer. Well, you can't write off the cost of that computer all in 1 year. You have to write it off over like a 5-year period. This Section 179 deduction says, however, now we're going to give you a whole bunch of expense that you can use for items that would otherwise have to be depreciated. And that's up to $250,000. And Exhibit 14 gives you a list of qualifying and non-qualifying property. Okay, so keep that in mind. A lot of things that you may think or your CPA may think have to be depreciated can now be expensed. The whole thing, the next one, pay attention to the useful lives prescribed by the IRS for depreciation is something you can just read, but the biggest point on it is the very last line in it. When you are identifying in a property which items have to be depreciated, you have different useful lives assigned to those items based upon what it is. If it's real property, meaning it's the actual building itself, that is written off over a very long period of time, like 39 years. But if it's not real property, but it's personal property, furniture, fixtures, and equipment, and all these things, that's written off over a much faster period of time and also may qualify for the one above, the Section 179 deduction. So there are these things on there called cost segregation audit techniques. In other words, be aggressive on what you think is personal property, because things that you may not know are like, the hot water heater. Yes, it's attached, but you could move it and so forth. That would be personal property in your house or your real estate to be able to be written off much quicker than the actual building itself. Again, very applicable to people with their own businesses or their own real estate that they're writing off. Estimated payments we talked about. Again, do that forecasting. As long as you pay 100% of last year's tax liability, then that's it. You don't have to pay any more till April 15th, so don't overpay the IRS. Dollar cost average into retirement accounts. I don't know why I threw that one in there, but basically what I'm saying again in there is that instead of waiting until you're filing your taxes, for purposes of an IRA, these are really more outside the scope of a 401k plan, but if you have your own account, your own IRA or Roth, instead of waiting till April 15th, which is the deadline of when you have to actually fund those, do it throughout the year for dollar cost averaging purposes. We are huge believers in averaging into your investments all the time, rather than try to pick a particular point in time. And it's never been more applicable and appropriate to talk about that than now. That other handout I gave you talks a lot about that. Make gifts to children and grandchildren. Don't need to talk too much about that one. Stock options, let's keep moving beyond that one as well. Domestic employees on the payroll. If you have domestic employees, a housekeeper, this gets back to that one I talked about earlier, okay, 1099 versus W-2, and you pay them more than $1,600, let me tell you what the IRS does when they audit you. The very first thing, here's what happens in an IRS audit. I'm the agent. The first thing I want to do, I don't want to see your tax returns, and I don't want to see all your receipts. I know you're going to probably have that. What I want to see is every single bank statement and check that you've ever written. That's what I want to see. Why? Because one of the things I'm going to catch is, who is this person that you've been writing checks to weekly or monthly, and what do they do for you? And if they are domestic employee and you have not been W-2ing them, you're going to be subject to 100% tax penalty. And that is an easy one for the IRS. That is a revenue maker for them, and they go after that every time. So it's just a warning. Avoid an audit. I have a cool little exhibit in there. I wish I knew the magic to totally avoid an audit, but obviously we're not afraid of being aggressive on our taxes, right? We talked about that, as long as it's legitimate and we document. But Exhibit 12 are just some interesting IRS statistics about what kind of returns are audited and what different dollar thresholds. I throw that in there every year, and you can take a look at that yourself. I've already talked about the 529 plan, but I didn't put in the website is savingforcollege.com. Tax-free distributions can pay an extended list of higher education expenses. So there's all kinds of things besides the actual tuition that can be paid for through this, so take a look at savingforcollege.com.